This is Barry Zalma, Zalma on Insurance on YouTube. I am an attorney who has retired from the active practice of law and now spend my time acting as an insurance claims consultant, an insurance claims expert witness, an author, and producer of these YouTube videos. Today I'd like to talk about convictions for health insurance fraud that have occurred in the month of April 2020. To begin with, a laboratory agreed to pay up to $43 million to resolve allegations of medically unnecessary tests. Genova Diagnostics, Inc., a clinical laboratory services company based in Asheville, North Carolina, has agreed to pay up to approximately $43 million to resolve allegations it violated the False Claims Act, including claims that it billed for medically unnecessary lab tests, according to the Department of Justice, who announced the agreement in April of 2020. The settlement resolved allegations that Genova, improperly submitted claims to Medicare, TRICARE, and the Federal Employee Health Program for its IgG allergen Nutra Eval and GI effects lab test profiles because the tests were not medically necessary. B, it engaged in improper billing techniques, and C, paid compensation to 3 phlebotomy vendors that violated the physician self-referral prohibition commonly known as the Stark Law. The Stark Law is intended to ensure that physician referrals are determined by the medical needs of patients and not the financial interests of physicians. Under the settlement, Genova has agreed to pay approximately $17 million through the surrender of claim funds held in suspension by Medicare and TRICARE, plus an additional $26 million if certain financial contingencies occur within the next 5 years, for a total potential payment of up to $43 million. Contemporaneous with the civil settlement, Genova entered into a 5-year corporate integrity agreement with the Department of Health and Human Services Office of Inspector General. The CIA requires, among other things, that Genova establish and maintain a compliance program with specific requirements and that it engage an independent review organization. The agreement resolves allegations brought by a person known as Daryl Landis under the KETAM or whistleblower provision of the False Claims Act. The False Claims Act permits private citizens to bring a lawsuit on behalf of the United States for fraud and to share in any recovery. The settlement provides for a payment of up to $6 million to Dr. Daryl Landis. The lawsuit resolved in the settlement was captioned United States versus Genova Diagnostics. Next, Harvard University agreed to pay over $1.3 million to resolve overcharging National Institute of Health grants. This settlement resulted from Harvard's self-disclosure issues that it identified on NIH and HRSA, Health Resources and Services Administration, grants by a particular professor and her team between at least 2009 and 2014. So it took the brilliant people at Harvard exactly 5 years to find out they were employing a person who cheated the government. The government contended that the HSPH professor, Donna Spiegelman, and her team overstated the time and effort spent working on certain NIH grants for which they provided support, and where they were not principal investigators or key personnel. The overcharges were associated with statistical analysis support that the professor and her team provided other HSPH professors on grant-related research. The settlement also resolved allegations that HSPH knew or should have known that the manner in which Professor Spiegelman and those working under her direction were charging time and effort had resulted in or would result in overcharges to these NIH grants. HSPH did not timely review Professor Spiegelman's historical timekeeping to determine whether she and her team had overcharged the grants. Since Harvard disclosed the potential overcharges to NIH and the U.S. Attorney's Office in 2016, it investigated the potential overcharges by the professor and others at HSPH, disclosed its findings, and worked cooperatively to explain the overcharges. In addition, Harvard has put in place additional internal controls and safeguards aimed at preventing overcharges from occurring in the future. I'll hold my breath for that one. A Dominican national, Martha Martinez Lara, 48, was sentenced for health care fraud. She had previously admitted to the court that in August 2015 she applied for Medicaid benefits in Rhode Island using a stolen identity, date of birth, and Social Security number of another person. Lara's application for Medicaid coverage was approved, and from approximately September 2015 through January 2019, 4 years before the government caught on, she obtained benefits totaling $11,288. Lara, a Dominican national in the United States illegally, who admitted to fraudulently gaining access to Medicaid benefits with the use of a stolen identity and Social Security number, was sentenced to 2 years and 1 day in federal prison. An investigation by Homeland Security investigations agents determined that the identity and Social Security number used by Lara belonged to a person living in Puerto Rico who told investigators she never lived nor visited Rhode Island. Lara, who was arrested in August of 2019, pleaded guilty December 2, 2019, and was sentenced on April 27, 2020 by District Court Chief Judge John J. McConnell, Jr. to 24 months in federal prison, 1 year of supervised release, and ordered to pay restitution in the amount of $11,288. The state can hope that it will receive the restitution, but one can only expect that they will not. A Florida man was sentenced to 15 months in prison and a $3.4 million in restitution for health care fraud. Jesse Peters, 45, of Lake Worth, Florida, was sentenced to 15 months and 1 day of imprisonment, 3 years of supervised release, and restitution of $405,065 for 1 count of conspiracy to commit health care fraud. United States District Judge Wendy Beetlestone presided over the sentencing hearing in Philadelphia. Because of the coronavirus, she did the conference via video telephone conference. The scheme involved Liberation Way, a drug and alcohol rehabilitation organization that had treatment centers in Yardley, Bala Cynwyd, and Fort Washington, Pennsylvania. The defendant participated in an elaborate scheme involving thousands of medically unnecessary urine tests ordered by a co-conspirator and processed by a lab in Florida associated with Peters. The co-conspirator ordered the test to be performed on samples obtained from Liberation Way patients even though the conspirator never treated any of those patients. The tests were then sent to Florida-based laboratories for a battery of unnecessary tests, and Peters paid kickbacks to principals at Liberation in return for directing the samples to the company. Over the course of the conspiracy, Peters kicked back $1,192,589 to his co-conspirators at Liberation Way in return for sending those unnecessary urine tests to the labs. The defendant pleaded guilty in April of 2019. And one can only wonder what took the government so long to catch on to this scheme. In another case, a surgeon agreed to pay $1.75 million, admitting he accepted kickbacks from a company called Spine Frontier. Dr. Jeffrey R. Carlson of Newport News, Virginia, agreed to pay $1.75 million to resolve allegations that he accepted kickbacks from Spine Frontier, Inc., a Massachusetts-based medical device manufacturer. One can only wonder how much Dr. Carlson actually received that he had available $1.75 million to pay to the government to avoid jail. Dr. Carlson also admitted he accepted free meals from Spine Frontier for himself and his surgical staff, and almost every day that he performed a surgical procedure with a Spine Frontier product. In total, Spine Frontier provided Dr. Carlson and his staff meals that cost thousands of dollars. Sham consulting agreements and arrangements seek to undermine the integrity of the medical decision-making process, patients in government health care programs, and the taxpayers funding these programs expect surgeons to make decisions based on the best interest of their patients, not in the best interest of their bank account. Centra Health, Inc. and Blue Ridge Ear, Nose, Throat, and Plastic Surgery, Inc. agreed to pay $10 million for their kickback agreement. In another case, Anthony C. Armstrong was sentenced April 17, 2020, to 18 months in prison to be followed by 3 years of supervised release in order to pay $50,000 in restitution for committing fraud and paying bribes in connection with Medicaid-funded transportation. From 2015 through May 2018, Armstrong worked for and helped operate Thai Taxi, Inc., and worked for other Medicaid-funded transportation companies, all based in Essex County, New York. In pleading guilty, Armstrong admitted he committed a variety of frauds against Medicaid and the New York State Department of Health, including billing Medicaid and receiving payment for trips where beneficiaries drove themselves to their own medical appointments, and falsifying the identities of the drivers for those trips, billing Medicaid and receiving payment for round trips to and from medical appointments when the beneficiaries took only one-way trips, and falsifying pickup and drop-off locations in order to increase the purported distances traveled and therefore be able to claim and receive higher Medicaid payments. Finally, Eugene Kramer, a Providence, Rhode Island chiropractor, pleaded guilty to healthcare fraud and filing false tax returns for failing to report approximately $67,000 in income from 2015 through 2017 out of his New England Spine and Disc Center. In exchange for Kramer's plea, federal prosecutors agreed not to bring additional charges of aggravated identity theft or structuring bank payments to avoid alerting authorities to the scheme. Kramer faces up to 13 years in prison and $350,000 fine. Authorities accused Kramer of providing lawyers with false treatment claims in order to help them secure personal injury insurance payments. At times, Kramer allegedly provided falsified medical notes and documentation. According to court documents, an individual assisting the FBI in its investigation visited Kramer's office on 15 times for treatment under the pretext of having been in a car accident. In most instances, authorities say little or no treatment was provided, and few, if any, medical notes were taken. The person was never given a diagnosis or treatment plan. According to court documents, the individual working undercover was emailed a package requesting a monetary settlement relating to the purported injury. The claim to Progressive Insurance requested, among other things, reimbursement for chiropractic services, which, of course, he never received. Former Providence Police Department records clerk Rosemary Garcia and her husband Miguel admitted in state court in October to illegally scheming to provide crash reports to Kramer. The Garcias received deferred 2-year sentences after pleading no contest. Rosemary Garcia also admitted to accessing the Providence police computers for fraudulent purposes and received a concurrent deferred 2-year sentence. They began investigating Garcia after receiving a tip she was delivering crash reports to a chiropractor. They watched her print out reports at her workstation and then bring them to the chiropractor's office. These reports of criminal convictions, even in this time of the coronavirus, show that our officers at the FBI and at Health and Human Services are still working, trying to stop healthcare fraud. Their efforts are slow and minimal, but better than nothing. You can read about all of their efforts and whatever might help you in understanding insurance fraud at ZALMA'S Insurance Fraud Letter, which is available at www.zalma.com. If you click on the link for the fraud letter, you will also be able to subscribe to the fraud letter. Thank you for your attention. I hope this was of interest and use in your understanding of insurance fraud.